Hey everyone, Anthony Venuto here with InTouch Mortgage Solutions. It's Friday, Finance Fridays, and on this episode we're going to talk about what's happening in housing and is it going to collapse? Is it going to crash? Stay tuned, you don't want to miss this. If you're watching this video on the Team Sessa YouTube real estate channel, once again, thank you for leaving all those comments in the comment section below. We want to hear from you. Don't forget to leave those comments. And while you're down there, hit the like, share, and subscribe button. Don't forget that notification bell so you can get notified every time we post a new video. But if you want to book a free consultation with myself or Santo, you can do that in the description box below. But now back to the video. What is happening in the Canadian real estate and mortgage marketplace? That is the question we get asked a lot when we speak with our clients, whether they be first-time home buyers, new to Canada, even existing homeowners with mortgages looking to better understand their financial opportunities. It is a big question, and obviously it is a very difficult one to answer, as nobody has a crystal ball. And I did stumble upon a very interesting interview conducted by Better Dwelling, and they interviewed basically Poloz. For those of you who don't know who that is the former head of the Bank of Canada, the former governor of the Bank of Canada, and he had some interesting thoughts on the housing market and the actual economic conditions that we're facing here in Canada. And although I do agree and disagree with some of his comments, I think it's important for viewers to actually take a second and maybe watch this video. It's about 30 minutes. It is a very interesting video, especially if you're concerned with the real estate and housing market in Canada. And I will put that in the description box below for those of you who would like to check it out. Now, obviously, he did go over many different points and the conversation was extensive. And it is important to look at what he believes are the fundamentals of the housing market and that the housing market is actually relatively stronger than we may think.
We're getting an adjustment to that now. Whether it's actually a bubble, I don't know. Fundamentals are super strong. So it's awfully hard to distinguish between a market that's adjusting to its fundamentals and one that's in a bubble. Probably we had some bubble features, I would say, but not that big of a bubble.
And obviously, I do have some opinions that was scratching my head when he said that, but he did bring up some very interesting points that I think are worth addressing. And he basically talks about the immigration component of the Canadian real estate market and how it is much different than the US. And he basically isolates and itemizes that, yes, the housing market was definitely frothy. There was definitely some exuberance in the housing market over the past little while. But basically, there is a floor on the housing market based on immigration and the mandate by the federal government to bring in all these new immigrants to the country.
The difference between the two housing markets that I think is Canada has a much higher level of immigration. And I think this is the most important fundamental for us. Those folks all need a place to live. Over 400,000 new arrivals this calendar year. That puts a pretty solid floor under our housing market, even in the short term. But of course, at the top end of the market, where all that extra, sold over asking and bidding wars and all that stuff. And, as you say, there's a lot of real estate agents all competing for all that and all this. That seemed a little bit frothy, and I can say, well, probably interest rates were the main driver. But there's also the new arrivals started up again. Right. So there's a lot of people coming into the market. So, and millennials or whoever think this is the opportunity of a lifetime. If I wait 5 more years to buy a house, it's going to cost me more, and it's going to cost me more even for the mortgage. So let's go. So everybody's in it all at the same time. So anyway, in the end, those fundamentals don't go away. You're just causing people maybe to wait a year until more interest rates peak and they have a stronger situation, or until more immigrants arrive and start buying houses and condos and so on. So in the end, I guess my long way of saying, I don't know. But I agree with that all those ingredients are there, and how it shakes out, my sense is net positive, that our fundamentals are much stronger here, and people have misdiagnosed that over and over. Right. They underestimate the importance of that immigration flow for what your housing market does.
And obviously, Canada needs these people to come to this country in order to help spur the economy. But when we look at those particular sentiments, it's important to understand it from the mortgage perspective of what we're seeing. So not only is there an influx of immigration and the question of where to put or where are these Canadians going to be housed, where are they going to go in the country, but more importantly, what type of immigrants or new to Canada individuals are we seeing? And from our perspective, the ones that we see come across our desk obviously have a significant amount of money or worth that they're bringing from their origin country. And it got me thinking about, our ancestors, my grandparents, when they came to this country, they had nothing in their pockets and basically came here with zero and started from scratch. A lot of the new to Canada immigrants that are coming, not all, I'm not saying every single one of them, but a good percentage of them, the ones that we've been working with, have a huge amount of money to put down, well over the 20%, and they have jobs in career paths and fields that are earning them six-figure incomes combined with their spouse. So this is a very, very important conversation and touch point, as these new to Canada individuals are generally going to be purchasing a home in the next few years as soon as they maybe get their permanent residency card. It all depends on that type of demographic. But he's basically isolating that, yes, there was some issues, and I relate the housing market to a tree, if I can use this analogy. A tree should grow a couple of inches per year, not a couple of feet. And what we saw happen over the last few years when we look at the housing market, it has definitely grown by the foot. And this is not sustainable. We know that, and there is an imbalance. There is a correction that is happening. It is like any market, it needs to readjust on its pricing. And thankfully so that we're seeing this adjustment happening right now. It was not sustainable what was happening in the past. That there is a floor to the actual, how much a home is worth in Canada. And obviously there are other components that he didn't touch upon, but regarding development, basically the stalemate or the stall right now in future development and what that will mean for inventory down the road here in Canada. Now, he does go on to basically continue the conversation and touch on some other components when it comes to interest rates, supply and demand, and he draws the analogy that I feel is actually very reminiscent of what is happening in the current environment right now. So, as a Canadian, you'll put gas in your tank, you'll have a monthly budget, which is important for Canadians to have at this particular point in time as the cost of everything is going up. And what he's pointing to is that after a Canadian sort of fills up their tank with gas, maybe they go to the grocery store, and because they know their budget, they're not left with much in their pockets. And that shopping cart isn't as full as it was just a few months ago, not even maybe a few weeks ago. So that has a bigger impact on the economy and actually bringing the economy to a grinding halt because of the fact that, we're not looking at some of those components, right? We're looking at this excess spending when it comes to credit and, basically monetary policy, when it comes to increasing interest rates. But Mr. Poloz, the former governor, basically points out that this is a bigger driver when we look at spending. What is actually being consumed?
The second thing is that commodities are high, so like things like oil, gas, gasoline, fertilizer, things that are ingredients and everything going in the economy. And that's why we have as much food inflation as we're seeing. Well, food and energy for your car or your house, that's costing more. And that means there's less money for all the other things you're thinking about buying. And as a result, well, Walmart did their results, and then Walmart says, look, the average shopping cart has way less stuff in it now than before all this. And that's because people filled their gas tank before they went to Walmart, right? There's only a weekly budget there, and they can't do it. So what that does is that slows down the whole economy way faster than interest rates do. And this effect is not really being talked about. And I think it's worth maybe 100 basis points worth of interest rates in terms of how its effect is.
And I wanted to take that conversation just a step further. And talking to people who are in retail and in these other industries, some retailers are not actually stocking up as much entering the Christmas season as they would have maybe just a few years ago. So there is this paradigm shift happening right now that could mean that, hey, listen, Canadians aren't going to be buying all these products over the holidays because there's just not enough room in their budget left to do so. So everyone has to cut back from somewhere, and that will take time to be felt in the economy. Now, also he talks a little bit more about the 1970s and the 1980s. And this I found very interesting. As someone born in the early 80s, I didn't experience it firsthand, but speaking to people that actually were alive and actually, owned homes, like my parents during that era, I wanted to get a better understanding of what they felt. And obviously, my parents being, my mother being in the banking industry, doing deals for a major bank back then, it's interesting to see some of the relations of how they're different or similar. And obviously, yes, we saw inflation peak at 20% in the Volcker era, where things were definitely expensive. Many Canadians were living paycheck to paycheck. And one important thing that Mr. Poloz points to is that obviously, there are different circumstances. Back then, there wasn't a home equity line of credit. There weren't these tools to help Canadians sort of get by. And whether you agree or disagree with that being a valid tool or something important, it does actually lead to my next point, is talking about the default rate in Canada.
I mean, I'm old enough, and you're not, to remember quite well the early 80s. And, as an economist at the Bank of Canada in 1981, I was there, and we were watching the default rate climb. And mortgages were, 20%, 19%, that kind of thing. And so we thought, oh my goodness, how far will that default rate go? It doubled, okay, during those 2 years. It doubled all the way from 0.5% to 1%. Okay, that at 20% interest rates. Okay, Canadians will do what it takes to keep their home, and what has happened in the last 40 years is people like me have all gotten, to become retirees or close to it. And so now we have some ability to help our kids through that if there is a bump through that. Okay, I'm not saying everybody can do this, but we know there are intergenerational transfers happening now, helping with down payments or helping smooth out the bumps and that sort of thing. So my guess is the default rate will remain quite low.
And Mr. Poloz, who was at the Bank of Canada in early 1980s, pointed to the default rate increased significantly, but it went from 50 basis points to 1%. And although that's maybe a significant jump, we haven't seen it basically hit over the 1% mark or hovered around the 1% mark, even during the great financial crisis of 07, 08. And we saw these actual numbers stay relatively low, and that's a good indicator of what is to come in the future. And he points to the Canadian sentiment that Canadians will do whatever it takes to keep their home, right? And that is an important aspect. Obviously, financial distress, very important conversation. This time can be a little bit different, maybe significantly different, but these are his words, and it got me thinking about what happened in the 70s and the 80s. And he did make this correlation to something that I found very, very interesting, where he points to the actual post-baby boomer era, where you had all this influx of individuals and employees going into the workforce. And now, if you look at what's happening now, all those individuals are leaving the workforce. And when you think about the Bank of Canada and their mandate for employment and this tight, labor market, what is actually happening, right? What happened in 1970s and what's happening now? And I encourage you to watch the video and actually digest the information, take a look at those arguments and see what you think of them. And, if you've watched it, leave your comments below. Let us know what your thoughts are on, what Mr. Stephen Poloz has. Now, obviously, he was promoting his book, and there are some conversations that he talks about, different criteria for what he sees happening to basically navigate the future volatility here in Canada. But he points to different factors, how the US is different than Canada, how 07, 08 is different than what happened in the US and what happened here, as well as how the administrative market for mortgages in Canada differs significantly than the syndication of the US market when it comes to interest rates and how quickly those rates can rise and fall back down. And he points to, obviously, as I said, the immigration component, which is much different here in Canada as opposed to the US. But one important thing that he isolates and sort of I see as a underlying theme in some of the conversations is how important housing is to Canadians and the entire Canadian economy.
Housing in Canada has risen as a contributor to GDP by I'm going to say 50%, roughly. It hasn't gone up 50%, but what I mean is the share of GDP has gone up something like 50%. And that puts us a little bit of an outlier compared to other countries. Through that period, maybe there's quite a lot of people that got into the housing market sooner than their life plan, the original life plan, right? And so, you may now go through for demographic reasons, a more moderate contribution fundamentally. And as I said, the only true offset for all that is the immigration level. Well, the immigration level has been bumped up.
As GDP, as a gross domestic product, Housing, although a non-productive asset, it basically doesn't reward anything except for the fact that you live in it, so it's not productive in the sense that it's not generating anything, it's just an asset. He points to the basic aspect that when you look at housing and you look at how interest rates are impacting Canadians, it is much different today than it was just 10 years ago. And that's something we noticed when we were listening to the Governor Tiff Macklem, the current Governor of the Bank of Canada, last week when he was in his press conference, indicating how interest rates are very impactful on the outlook for Canadians and their spending. And obviously there's so many different things to have this conversation. But what I really want to do is basically state that I think it's important to digest a lot of different content, not just basically a one-sided argument. I have lots of friends who will sit there and say, Anthony, the housing market's going to collapse. It can't stay like this. And obviously, that's an opinion that I can definitely share and sympathize with. But when you look at the actual fundamentals of housing and the lack of inventory that is being produced, and the fact that that is actually being extrapolated further with projects being declined, new to Canada immigrants that are coming into this country with some wealth and employment ability, who are eager to live the Canadian dream and purchase a home. So I want to leave the video here, and I encourage you once again to go out, check out the video. As I said, formulate your own opinions on what's happening in the marketplace. Watch the video, leave the link in the description box below. But until next week, we'll leave it here. If you enjoy the content we're producing here at InTouch Mortgage Solutions for our Finance Fridays episodes, please don't forget to hit that like, share, and subscribe button. Hit that notification bell so you can get notified every time we post a new video. But have a great Friday, and even better weekend ahead. Thanks for clicking, and thanks for watching.